Hello traders everywhere, Jeremy Lutz coming to you from the digital studios of MarketClub. And big bank stocks are leading the way today, and it seems that traders have apparently decided that the old standby is where they want to invest versus the hottest sector of 2017. And of course that old standby is the big banks. This change in sentiment is primarily due to tax reform on Saturday. The Senate approved their version of the tax bill in a narrow vote, but they still have a lot of work to get both their bills combined to get them in front of President Trump for approval. So we'll have to see how that shakes out. But I thought I'd do something a little different today. Instead of just going through the markets and showing you where everything stands. And kind of what tipped me this morning before I'd even read the news, I woke up, saw that the markets were open. And what I like to do on Monday mornings, and typically every morning, is just log into MarketClub, and I go right here under our top markets. And I just click on the top stocks list, and I like to pull it in to see just kind of where the market's heading that morning. This list pulls in everything ranked by score, trade triangles, and volume. What are the hottest trending stocks in the market? And immediately I saw Bank of America. And in fact, this morning, three of the top five were Bank of America, JP Morgan Chase, and Citigroup. And I was like, looks like a change to maybe investing in the big banks. So we'll pop over to our portfolio and see where we stand, where the big banks are. And I have a portfolio here that kind of gives you a quick reference point that you can see. Goldman Sachs is up 1.5%. Bank of America is almost 4%. Citigroup's up 2.6%. Wells Fargo's up 2.8%. And JP Morgan is up 2%. So it really tells you that the traders have really gone into the banking sector and have really left the S&P 500. Just a quick way you can go in the morning, kind of see where the mindset of the market is and what they're trading. So with that, we'll get into our regular update. We'll take a look at where we stand right now with the S&P 500. Currently trading 2,656 with a chart analysis score plus 90. Key level to watch will be 2,557.45. A move below that level would issue a red weekly trade trial indicating a move to a sidelines position. Dow Jones currently trading up at all-time highs at 24,434.76. I feel like a broken record that every time we do one of these videos, we're at new highs. Chart analysis score is still plus 90, indicating overall the long-term trend is still up. Key level to watch remains 23,242.75. A move below that level would issue a red weekly trade trial indicating a move to a sidelines position. Nasdaq currently trading at 6,837.23 with a chart analysis score plus 85. Down a little over 1/10% today. It is the only laggard of the three indexes as sell-off continues in the tech sector. Key level to watch, 6,667.31. A move below that level would issue that red weekly trade trial, indicating a move to a sidelines position. Dollar index kind of bouncing back up a little bit today, up a little over 1/10%. However, we are still in a sidelines mode based on a chart analysis score, -60. Key level to watch remains 94.22. A move above that level would issue a green weekly trade trial, indicating a move to a long position for the US dollar. Gold currently trading at 1,277.70, still in a sidelines mode with a chart analysis score plus 65, indicating that the short-term trend is in a sideline mode. Overall, long-term gold is still up, but it is weakening. So our key level to watch for gold would be 1,292.50. A move above that level would issue a green weekly or a green daily trade triangle, indicating a move back to long positions for gold. And crude oil currently trading at 57.61, down about 0.6% on the day. However, the chart analysis score still plus 90 with green trade triangles across the board. Key level to watch is fairly close at 57.29. A move below that level would issue a red daily trade trial, indicating a move to a sidelines position. And we'll back it out here. We'll take a look at Bitcoin. Had a bit of a run up this morning. Actually traded yesterday back above 11,000, up to an all-time high of 11,834. It's backed off those highs today in trading, still trading above 11,000, however, at 11,212.36 with a chart analysis score plus 90. This move comes up on the heels or news that futures trading is getting ready to start. And I believe the CBOE announced that they're going to be starting this Sunday. So it is coming up soon. So it's going to be interesting to see how, once the futures contracts come online, are there going to be some big shorts against Bitcoin, or are people still going to be going long? It's going to be interesting to see how that plays out. We'll get into more of that later this week with more of a direct article and video on Bitcoin itself. Key level to watch remains 5,645.66. A move below that level would issue a red weekly trade trial indicating a move to a sidelines position. And then we had our active trades, 2 trades, one we were watching and one we were in. Had some big activity last week. Williams and Sonoma actually today gave us a green weekly trade triangle at 52.89 to re-enter a long position with a chart analysis score plus 100. So we will take a look at that. We're actually going to go ahead and we'll take a look and set our stop. And we want to set our stop around the $44 level, which that is pretty significant, but that is where the red weekly trade triangle will kick in for Williams and Sonoma. So we need to just be diligent, keep an eye on it. We'll watch it. But again, we did get back long Williams and Sonoma, much as I thought we would. I was a little shocked at the sell-off after they reported earnings here, and it dipped down to those levels because it was positive. I don't think it was as great as everybody thought, but it was positive. And as we head into the holiday season, look for some profits out of Williams and Sonoma. And we'll look at Alibaba, currently down, trading at 172.90. We actually had a red weekly last week at 176.73 that we were waiting on. Chart analysis scores negative 60, and this just comes on the heels of the big tech sell-off. I believe I don't believe anything's wrong with Alibaba's business plan or flawed or what they're doing. I just believe everybody's kind of dumping out of tech and heading into other areas as we end the year. Just a bit of profit taking after a considerable run for the year. And we'll actually back this chart out and you can kind of see how impressive this run was. And we'll take these off. And you can see we actually had our monthly trade trial enter on February 22nd at 104.57, and we're currently trading at 172.81 after hitting highs up around 191. So I just think we're taking some a lot of traders are taking some profit off the tables as we head into the end of the year, and I look for Alibaba long term to bounce back. With that, every success. Have a great trading day, and I'll be back later in the week.